Welcome back to this lesson. We are going to look at retracement and what's the importance of a retracement. So retracement is when price moves back inside the recently created price range. So for example, we have a price range that market moved from a high to low. So retracement is when market moves back to this range from this low to this high, then we anticipate the market to move back down. So what's the purpose of retracement? What's the importance of retracement? So when we see that the market is returning back to this price range, it indicates that there's a willingness for the market to reprice and to trade efficiently. So this is the part where the market makers reprice to levels that have not been efficiently traded. So as I explained in the equilibrium versus discount and equilibrium versus premium, when we get this price range, the market moves back to retrace to this range. We are looking for efficient price, for fair valuation. So the market will most likely move to a point of above equilibrium or a point of a fair value, which may be in form of a fair value gap, or it may be in form of a liquidity void. So, and this will find it above the equilibrium if we are selling, and below if we are buying, that is. So for instance, I should have drawn it the other way around. So for instance, if we are, yes. So if this is what we are looking for buy setups, when the market moves back down, so any price below the equilibrium, it's essential for us to be buying. And when we are selling any price above the equilibrium, it is key for us. It's where we capitalize on our sales. But sometimes that is it. So go to your charts and do more examples of and see instances where the market has retraced. So even for us, let us go and look for examples in the daily chart for retracement opportunities. So even in the daily chart, we get retracement. We can see that from when market moved from this price swing high to this low, we came back to reprice. And what we'll be looking for in retracement, it is areas of fair value gaps or liquidity voids. So I wanted to say in the other period that it's not a must for the market to move back to equilibrium if we have a fair value gap or a liquidity void, but it's not a must for market to move above the 62%. But you can see that the market did try to reach for the equilibrium, but what was in the equilibrium? It was this fair value gap. So we have to look at when the market has made a movement and has created a price range, and we are moving to retrace, we have to understand what is inside that price range that the market will seek to reprice in. So it's not a must for us to reach in the 62. Sometimes we may, but if we have a fair value gap, we want to look for instances in which in that fair value gap the market to collapse and for us to capitalize on sales. So let us look at other examples, maybe in the lower time frame. So in the lower time frame, let me look using the 1 hour because we have to understand first whether we are in a sell market or in a buy market. So in this instance, we get a run on stops, then market created a price range, yes, from this high to this low. So as we can see, the market, yes, here there's a fair value gap, but is it in a point of equilibrium? Is it above or at equilibrium? So we can see that here, any price between this 50 and below, it is discount, but we are looking to sell. So always remember, we are selling at premium. We do not sell at discount, we sell at premium. So what is above this? What is above the equilibrium? We can see that there is also liquidity. So what we look for in a retracement is either fair value gaps, liquidity voids, or are there liquidity for the market to run and then move back down. So let us look at another example. So this is a buy setup. So this one was a sell one, this is a buy one. We can see that also here we got a run on stops, then market moved, created a price range, a price swing. So from this price swing, we get that the market retraced back down. So in this retracement, what are we interested in? We are looking at prices of fair value, and we are looking to buy at a discount. So any price below the 50%, which is the equilibrium, is the discount. And also here we get that there's a fair value gap. So in this fair value gap, there's this first one. So I can say that you won't know exactly that the market will hit the first one or the second one, but as long as it is an area below the 50%, the equilibrium, then it is okay. So anyone who bought at this price level, still it's okay. Anyone who bought even at this 70.5, 62, any level between this fair value gap to the second one, it's still okay. Yes. So, and we can see again later the market moved back higher. We can see that also this fair value gap during this price point, this time the market came, hit, then moved back higher. That's it for this lesson. Go and do examples of retracements and see which areas that the market reprice in during a retracement. Thank you for listening.